Thank you for that, and I'm presenting to you from my office in Northbridge in Perth, Western Australia, because we couldn't make it there, sadly. So Matsa Resources, the code's MAT. The photo that you currently have on the screen is our Red October mine site, which of course goes underground, and we've been recently mining there. The company itself, the code's MAT, we've got a market cap of about $30 million. Our share price has had a nice little spike over the last few days, and I'll tell you why that's occurred. Top 20 shareholders of 55%, and I've got a fair bit of skin in the game personally, which is shares that I've purchased. The company has developed a new strategy of late, and really what we're focusing on is building a gold inventory which will enable us to build our own plant and really create substantial shareholder value. We currently have 700,000 ounces in hand on a 503 square kilometre contiguous tenement package in Western Australia, northeastern goldfields, about 240 kilometres north of Kalgoorlie. We've also got a project which is our Symons Hill project in the Fraser range, and the reason I've raised this apart from our normal Lake Carey discussion is because of recent news events. Symons Hill in the Fraser range is situated about 6 kilometres directly south of the Nova nickel mine owned by IGO. We have 4 tenements in the area for about 225 square kilometres. But importantly, at our Symons Hill project, IGO did an 840 odd metre hole, and we intersected a standout 410 metre intercept of blebby to semi-massive sulfides. We note that there is pyrrhotite, chalcopyrite and pentlandite in that core, in those sulfides, and this hole was beneath a soil anomaly which had 0.1% nickel and 0.1% copper. We are waiting for the assays of the core, and we expect these assays to come in about 2 to 4 weeks' time. And I assure you, we are waiting with bated breath. The actual ground itself is a joint venture between IGO and Matsa. IGO are earning a 70% interest by spending $4 million and paying Matsa $3 million for that 70%. Matsa is then free carried to decision to mine. But going back to Lake Carey itself, this is where our true value is. We have got 3 main hubs out of about 6 hubs out of the 500 square kilometres. And importantly, we've got Red October, which is a current operating gold mine, Devon Pit, which is a licensed mine, and Fortitude, which is also a granted mining licence and approved mine. Matsa in total has 694,000 ounces of gold, and I ask you to note it's a very good grade, 2.5 grams per tonne. This really is our pathway to us building our own mill and becoming a mid-sized producer. So we are delivering on our growth. We started at 441,000 ounces at Fortitude and Red October. We added 74,000 ounces December last year, further 8,000 ounces early this year, 58,000 ounces at Gallant and Hill East. We've added 40,000 ounces in Binder in last June, and we currently have 694 and expect to add somewhere between 600 and another million ounces over the next 18 months if we have successful exploration. This is where our exploration targets exist, and you'll see Red October and Fortitude North, as well as Devon, to be significant discoveries for us. So really what we want to do is we want to continue discovering, adding to that 694,000 ounces and building our own mill, situated somewhere near Fortitude Stage 2 mine. However, Devon does allow us, with its high grade, being 4.6 grams per tonne, to potentially take it to a third-party processing and actually put that into production and start mining that and give us a substantial boost to our cash before we even have our own mill. So our own mill, we've done an economic feasibility study. We think a 600 tonne per annum plant will cost us no more than $55 million to build. And we think from that we can develop $95 million positive cash flow from Fortitude and Devon. We anticipate our ore processing costs to be somewhere around $32.50 per tonne. Interestingly, our key features are that we've got granted mining licenses, we've got the gold resource, we've got the substantial modern camp, all the whole roads in place, and we've got a very experienced team to be able to deliver on this. What we now need is upside, and we think we have significant exploration upside. So our Fortitude Stage 2, our feasibility completed at $2,500 per ounce gold Australian, we see will deliver $55.4 million from the production of 54,000 ounces. We are currently reviewing and re-optimising this bid, and we hope within the next 2 to 3 months to deliver a new feasibility study with significantly enhanced parameters. We expect the positive cash flow to grow quite well. Our Devon pit, we recently finalised this feasibility study. We did this at $2,250 Australian, and we expect Devon will give us just under $41 million positive cash flow within a 12-month period. So Devon can probably go into production within 12 months, and Fortitude is ready to go into production right now. So all that we need is a milling opportunity. Fortitude can certainly go into our own mill when we build it. Devon can go into our own mill, or the grade, as I said, being 4.6 grams, can certainly go through a custom mill or a third milling opportunity and potentially give us $30-odd million positive cash flow if that's the case. Binda, we recently added some 40,000 ounces to our resource, and we are currently doing a feasibility on this. But we would anticipate this also to be a positive cash flow scenario. Importantly, Red October is where we've recently been mining, and we've put this into care and maintenance to enable us to go substantial exploration drilling. Has got 173,000 ounces of gold in situ at 5.8 grams. Our recent mining produced gold at $1,259 per ounce Australian, with an all-in sustaining of $2,272 Australian. It was a very high all-in sustaining because of our high milling cost. We see substantial upside at Red October. The current picture shows our current development, but we can see some very high-grade intersections at Nemo. 11 metres at 28 grams a tonne, 12 metres at 23 grams per tonne. Lionfish, the Bruce Lode, the Splay Anchor and Marlin have also produced a lot of success for us. And we can see us drilling over the next 6 months at Red October producing some more of these great grades. You will see that we are currently in a trading halt. We are doing a capital raising. We expect to come out of that very quickly, and that will enable us to be well and truly funded for exploration, not just at Red October, but elsewhere. Upcoming news flow that we expect in the very near future is Devon regional exploration results. Yesterday we released the 3-metre splits, and we had some very good hits, 3 grams, 17 grams per tonne. There was also some 3 grammers and 9 grammers at 3 grams per tonne. We expect the 1-metre sample results to improve on those grades. We expect within the next 8 weeks to provide out the Binda mining study. We will have upgrades at Red October, particularly Lionfish, Marlin, Nautilus. As I said previously, Fortitude Stage 2 will have an updated feasibility study. So will Devon and Hill East. We will certainly progress, and we will release to the market news for our ore processing plant. We will complete our site selection and engineering studies and lodgement of environmental permits. Fortitude North, we hope to produce an initial model after some initial drilling in the next 4 to 6 weeks. And of course, Fraser Range, we expect assays from that fantastic 410-metre intersection in the next 4 odd weeks. Lake Carey is a fantastic place to be. We have about 30 exploration targets, and we will be hitting those systematically over the next 18 months. So we're very confident new high-grade results will come. That's our exploration target, and I'm very quickly running out of time, but this is where we'll be concentrating: Devon, Fortitude, Red October and Lake Carey. Thank you very much for that.